Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hey Lauren.
Hey everybody.
Lauren, so I thought we had a great episode last week talking about the emotional impact of the stress of the volatility and the economic conditions,
right,
and about some proactive steps that people can make. It's interesting because what I saw as this was being taped last week was that there was a lot of volatility in the market. But there wasn't a lot of heavy selling or trading. The trading numbers were lower than they were like even a few weeks ago. So
interesting.
In fact, like I think on one of the most volatile days, which was Thursday, August 17th, it was about 40% less trading volume that was causing this volatility.
Interesting.
And you mentioned, I think, that there's record numbers of people exiting mutual funds.
Yes,
okay,
that's correct.
So this article in the USA Today came out in the middle of August here, and it was interesting because they talk about individual investors. They call them the mom and pop investors.
Right. Okay.
And it kind of reaffirms what you're saying. They're leaving the market with this volatility. They're buying as it's going, or selling when it's going down, and maybe sometimes they might be buying as it goes up. But they talked about it. The experience. It was kind of happened also back in the late '90s when the tech bubble was going.
Right.
Up. And I'm not going to go over the numbers or anything like that. But the interesting thing was how institutional investors talk about the mom and pop investors, which is kind of sad, but they came up with the term that mom and pop investors always get it wrong, and now they make ill-timed moves when the markets are going down and sell out at the bottom, and then they buy in, maybe as it's going higher again. Right. They call that dumb money investors, which is kind of derogatory, but this is how institutionals look at them, and then. It's interesting though. So that's what I'm not going to call it dumb, but that's what the mom and pop investors are doing. The people that are not educated about what really goes on with investing, and obviously there's a lot of them that are doing that. Here's what corporate insiders are doing. These are company CEOs. Right now there's an all-time in the first 2 weeks of August. There's a high amount of buying going on into these dips in the markets,
that's
and
right.
so. And this is legal buying. This is legal insider buying. They have to disclose this. This is how we know the numbers. But it's interesting. Like for instance, Morgan Stanley had an article about they think that there's a relatively high chance of a recession could happen again, and that's one of the things that's causing today's volatility.
Right.
While the CEO of Morgan Stanley just bought 100,000 shares of the stock.
So. Oh yeah, the same time that they're putting out reports that we're going to have another recession. The CEO is buying stocks, and the CEOs are being rational right now, because they have to invest in something. Right now, by any reasonable definition of projected forward earnings, stocks are selling at lower than historical averages. The price of stocks versus their projected forward earnings, by any reasonable definition. Also, by any definition, reasonable or not, bond yields are as low as they've ever been. And so corporate CEOs are doing the smart thing. And in the short term, we have two things happening. We have one group of investors that's selling because either they're panicking or because they've been unemployed too long, they need the money, whichever one it is. And then we have another group of investors that's looking towards the future, not looking towards the last 2 years, looking towards the next 20 years or the next 30 years, and they're buying. Yeah. And those are the two counteracting forces. Right,
and it's interesting because the corporate insiders know what their companies are doing and what their projections are. Back in the last market, the last really bad bear market bottomed out in roughly March of 2009.
Right.
At that time, corporate insiders bought roughly a little over $1 billion worth of equities. Guess what? For the first 2 weeks of August, it's almost $1 billion again.
Yep, same thing happening.
Right. So what I want to tell our clients, and what we want to tell people that maybe are a little worried, is that don't follow the mom and pop investors. Follow the institutional investors and follow the people that know about their companies, because that's really what's going to long-term drive the earnings and the returns in the stock market.
That's right.
All right. Well, thank you very much for watching this episode of Erickson TV. We'll see you soon. Take care. Bye now.
See you next time.